Hello and welcome to this weekly Outlook video at xm.com. I'm Maria Pachardadis, and joining me is Senior Investment Analyst Rafi Boyajan. We'll be taking a look at the week ahead. So Rafi, we have quarterly inflation numbers coming out of Australia on Wednesday. What should we look out for given that the RBA's February meeting is approaching and there's some speculation of a possible rate cut?
So that's right. There's a lot of speculation as to whether or not the RBA will cut interest rates at its next meeting in the first week of February. So up until recently, up until we had that strong jobs data, expectations were quite high that we could get a rate cut because of the possible impact the bushfires have had on the Australian economy. Now investors aren't so sure, and they've actually significantly pared back those expectations. So that's why the inflation data will be the last piece of the puzzle before the RBA's meeting. If we were to get better than expected numbers, of course, that would further pare back those expectations. On the other hand, any negative signals about price pressures in Australia from that fourth quarter inflation data could see those rate cut odds go up again, and of course that would also weigh heavily on the Australian dollar.
I see. Now, it's going to be a big week in the US because we have the FOMC meeting as well as a number of important data releases. What are the main highlights going to be?
Well, the Fed, of course, is a highlight, but this meeting isn't expected to produce any fireworks. We know that the Fed has strongly signaled they're going to stay on hold for the rest of the year, so we're not expecting any changes at this FOMC meeting. Now, the data might be a bit more interesting for investors because it might give them a better sense of where the U.S. economy is headed, and that should help them decide whether the next time the Fed shifts its stance, it's going to be more towards a more dovish or hawkish one. We're going to have on Thursday the first estimates of fourth quarter GDP. Growth is expected to stay at 2.1%, and that's a good figure considering that it wasn't that long ago where markets were expecting a sharper slowdown in the fourth quarter. We're also going to have the core PCE price index and personal consumption numbers on Friday as well, all of which will help give us fresh insight into how the US economy is performing.
And finally, the Bank of England will also hold a policy meeting next week, and there's a lot of anticipation as to how policymakers will respond to the recent run of poor data. Do you think we're going to see a rate cut on Thursday?
Well, a rate cut is still on the table, even though the data we saw this week had been somewhat more encouraging. And that's because inflation has fallen to a three-year low 1.3%. That's well below the Bank of England's target of 2%. So even if the data does start to improve, will that be enough to push up inflation back towards the bank's 2% target? So at the moment, there's about 55% probability that the Bank of England will cut interest rates next Thursday. So if we were to get a cut, we're likely to see a big drop in the pound, given that a cut hasn't fully been priced in yet. On the other hand, there's an equally strong chance of a rebound in the pound if the Bank of England decides to stand pat.
Rafi, thanks so much for joining me, and thanks for watching at xm.com.